Welcome back to the show. Still down about 0.5%. It's been a news-heavy day for the market, and that, as you can see, is Paresh Sukthankar of HDFC Bank getting ready to address the press with his HDFC Bank's earnings this time around. On expected lines, the numbers have been pretty much solid, in line with estimates. NII growth of 27%, net profit growth of 30%, and no problems at all. In fact, net interest margins as well have remained healthy at 4.2% versus 4.3% last time around. So just a little bit of a cool-off in the net interest margins, but otherwise not too much of an issue with HDFC Bank. We've seen the same with IndusInd Bank and with DCB Bank as well. So the first lot of banks that have come out have reported a good set of numbers. Let's see when the bigger PSU banks start coming out, then the real dirt in terms of asset quality, etc., will start to trickle out. But for now, the HDFC Bank numbers are pretty much in line with what the street was estimating. The provisions this time around have fallen by about 23% on a year-on-year basis and about more than 40% on a sequential basis as well, and the asset quality has been stable for HDFC Bank, similar to what a couple of others like IndusInd Bank and DCB Bank have reported this time around. For the market, 5680, so we're actually struggling to get to that 5700 level. Seems like we may not get there today. That's the indication, and the volumes are picking up, so about 1.5 lakh crores is what we have done. Can we cut across and listen into him? Okay, we'll just wait by. But before that, Mr. Tulsian, just wanted to get your thoughts in on DCB, because, okay, I'll come back in a bit. Here's the HDFC.
Good afternoon, everyone. I'll just quickly walk you through some of the salient features of the results, and I'll be happy to take your questions thereafter. The net revenues for the bank for this quarter were up 22.2%. So the net revenues were 5,076 crores. The major portion of the net revenues came from the net interest income growth. That was 22.9%, and NII therefore was at the NII growth was at 27% roughly, where the actual figure was 3,731 crores. Driver for the NII was loan growth at 23% and a net interest margin of 4.2%. So clearly the top line in terms of both net interest income and therefore net revenues held up reasonably well. On the other income side, the largest component, as always, was fees and commissions. Fees and commissions grew by 22.4%. The FX and derivatives had a slightly soft quarter. The growth there was 8.2%. Operating expenses grew roughly in line with revenues. They were up 23%. As well, the cost-to-income ratio was at 49.4%. Provisions and contingencies with asset quality holding up and in fact improving. The provisions were down slightly, so total provisions and contingencies were at 293 crores as against 366 crores, and that resulted in the net profit growth of 30.1%, coming to 15